Welcome to another video from the Trader Guy. In this video, I'm going to take several steps back because I know that not everyone has a trading background. So one of the most important things a trader can do is figure out what they want to use in their Forex trading strategy. Now, the very basic thing that all traders should be using is support and resistance. Now, there are such things as fundamental traders, and there are such things as technical traders. The thing is, though, support and resistance is probably one of the very few things that kind of ties everybody in together. Because even if you are a fundamental trader and you trade basically on economic news, you can look at a chart and understand that there are going to be certain areas where price doesn't want to go through or above or below or whatever, and that's what this video is about. Support and resistance is the most basic concept for trading, and as such is without a doubt the number one thing you need to learn, especially if you're going to use any technicals whatsoever. Support is simply where price is supported. It's exactly what it sounds like. So you would get, for example, if you look at a chart and price is falling and it can't get past a certain area, it bounces up, it comes down, and it bounces up, and it comes down, and it bounces up again and again. Well, that's what is known as support. And what that means is that there is active participation in the market that thinks that whatever, and this is true with all markets, not only Forex, whatever that price is cheap. It's where people want to own it. Now, let's contrast that with the concept of resistance. Now, resistance, go ahead and make this a different color here, is simply where price is resisted, just like it sounds. Now, exact same thing, but in reverse. So there is a price, and this is our resistance area, and the market goes up, and it just can't get above that. In other words, price is being resisted at that point in the market. Now, knowing support and resistance, what they are, you could begin to look at charts a little bit differently, and I'll get to that in a minute. Basically, you will notice when you look over at a chart over time, there are certain areas in the market that as price approaches, there's always a reaction. And I'm trying to draw this freehand just to give you a basic idea. But in this particular chart, we have a downtrend. So we know over time that price is depreciating. But notice how on this little fake chart that I drew up here, we have areas where price had reacted. That was support. Another phenomenon about support and resistance is where we once had support, we'll have resistance later. As you can see, this same area had supported the market, and when it finally did break down, it was resistive later. Same thing here, it had supported price as it bounced up, and it resisted it later. Now, does support and resistance always work? Of course not. It doesn't always work, but it does give you a little bit of a roadmap on where you want to trade, and that is really what I want to pound into your head in this video. This roadmap that I mentioned is part of a way to read the charts to find out exactly what's going on in the market and where people are interested. It is much like anything else in life. Timing is everything. For example, if you were involved in the housing market, a few years ago, had you bought and flipped and rolled houses, say in 2005, you probably did quite well. If you're one of the last ones in, you did quite poorly. The markets are kind of the same way. In my experience, you only want to trade at support or resistance. That doesn't mean that you can't make money in between, but the odds are increased. And that is the basic tenet to technical analysis. You are looking at a spot on the chart where some type of reaction is most likely going to happen. Okay, now that we've gone over basically what support and resistance is, let's look at a real life example. Now, a lot of traders will look at a chart like this, and this is the Euro US dollar weekly, and what they'll see is they'll say things like, wow, if I would have just sold there, if I would have just bought there, would have just bought there, sold there, whatever, whatever you're seeing when you look at this chart. And then other traders will look at it, and I'll do this on a line chart just to kind of make things. This is what it's done over the last, say, 5 years, roughly 4 years, I guess. It's been back and forth in just a big choppy mess. Now, if you don't have a good understanding of support and resistance, you'll never see what I see in this chart. Now, there's a couple things about support and resistance that I would also add. Humans like round numbers. And what I mean by round numbers is numbers ending in 0. And I would add numbers ending in 50. But 50 is probably about 10% of most of the numbers that I see. This will vary slightly on charts, but I'm about to show you a trick that will clear a lot of this up. So a round number, for example, would be 130 even, 142 even, for example. A 50 number, of course, would be 125.50, 131.50, and on and on. So now that I've shown you that, let me show you the first thing that I do when I set up my charts. I go to the weekly, and I will type in big round numbers, and I will do it in 500 pip increments. And you'll see why here in a second. And you'll find some pairs are a little bit more receptive to this than others. The majors certainly are more likely to work out like this. So as I keep going down the line, I'm just typing in every 500 pips. You can start to see an interesting phenomenon. Most people just see these charts as random noise, and quite frankly, there are days that they are. But in the big scheme of things, there really is an order to all of this. And I'll do one more. So I've put in, handful of lines here, and now that I've drawn the 500 pip lines, let's take a look at this. It doesn't look quite so messy. I should also state that these lines are zones. They're not to the pip. They're just basic areas to look for selling pressure, buying pressure, whatever the case may be. As you can see, at 155, we definitely had some support there. While at 160, we definitely had some resistance on the euro dollar weekly. But I want to show you another phenomenon, and that is this resistance here became support. This bar crashed right into it, and it eventually broke down, but you can see that it did hold support. And then once it got broken through, this bar retested it as resistance, the following week. Notice all these weeks later, and actually this is, I don't know, about a year and a half later, when the market rose, it found that area resistive again. One of the ways I like to think of it is as a high rise. So think of it as these are floors on a high rise. First floor, you go up to the second floor. What was once your ceiling is now your floor. Third floor, the second floor ceiling is now your floor, and vice versa. Obviously, you go from third to second, your former floor becomes your ceiling. It's an old expression. What was once the floor becomes the ceiling, and vice versa. But as you can see, these areas repeat time and time again. Now, I'm looking at this, and I see that the top of this reached the 150 summit and then gradually ground back down. It was a little bit messy in this area. That's okay. That does happen. But as you can see, as a general rule, over time, this repeats itself over and over and over. You can see that even in this mess here, there were a couple areas, and there are candles stopping there. And you can see there, and you can see there. It didn't quite go up there that time, but you can see it did react to it, and then down there it reacted as well. So it looks a lot cleaner, doesn't it? Now, I mentioned earlier that sometimes there will be 50 levels, and there happens to be one on this chart that I know of, and I'll show it to you. I take this bar, or this line, and I go down, and this area here, you can see that there were several times where you'll see it was support there and resistance there, and on and on and on. But the reason I brought all of this up was a lot of people don't understand support and resistance and how easily it can be used. No matter what type of trading you're doing, you should be aware of it. Now, the next thing that I'll bring up, and unfortunately I see a lot of people doing this, what they'll do is they'll take a chart like this, really clean, and they'll go down to smaller time frames and start adding support and resistance. Now, you can do that, but what I have found through my experience is, like for example, there's something going on there, probably, on say the 4-hour charts or something. But what I have found over time is if you start adding other lines, it gets to the point where you have no room to trade whatsoever. You want to keep this as simple as possible. You know that these big numbers, by looking at this chart, cause reactions. So let's just say in this area there's a 4-hour support or resistance line. And a lot of traders will say, well, look, I mean, it's an opportunity to trade. So what? There are plenty of pairs out there. Somewhere on your charts there will be a pair that, has come up to an obvious area like this and is showing weakness, and you can sell. Let this one go. Let it be at a big major area. The day I started applying that to my trading, it got so much easier. Zooming in on the daily, these are the weekly lines. I could go as far as to kind of tweak it a little bit here. I could probably come up with something here. I don't even know what that would be, 133.50 or so. And then you can go in like right here where we're starting to struggle at 139 and 140. And then maybe, obviously something's going on right here in the middle of this, so, why don't we do that? And then the next thing you know, you're risking, as far as your support and resistance levels are, you're risking something like 70 pips to gain maybe 90, and that's not the way to go. Like I said, keep it simple, keep your charts clean, and let them guide you. Right now, for example, with all of this going on here, I might not be interested in trading this pair. I do see, however, that the 140 level is much stronger than whatever's going on in this little area. So if I get it a signal to short, and that's a totally different concept, but I just want to show the support and resistance. If I get some kind of sell signal at 140, that becomes much more interesting than this mess and this little bit of tightening range. If I get a sell signal at 145, again, becomes much more interesting than this. If you stick to that, just that alone will save you all kinds of time and grief and keep you on the profitable end. It should also be mentioned that quite often support and resistance will go from one level to the next. So what I mean by that is if we find resistance here at 145, which we obviously do, it goes back and it finds the 140-ish area. So a lot of times you can put on a trade and you know exactly where to go if you have these levels mapped out. If I zoom down to the 4 hour, you can see still crystal clear. Your stops can be tighter, but you're aiming for a large enough area to make the move worth it. For example, if you shorted here at 145 and say had a stop at 146, 100 pips, but you're aiming for 500 pips, those are the odds that put in your way. Put Forex, in your way and in a way that you can make some money. By micromanaging all of the various little tiny support and resistance areas, you don't allow yourself that freedom of movement. Thank you for taking the time to watch my video, and please remember that I have a free educational forum on my website at thetraderguy.com, and there is a link at top that says educational section, and by all means feel free to show up, post, watch my videos, comments, everything else. And if you have any questions or comments, feel free to email me at chris@thetraderguy.com. Thank you.